Good evening. I hope you're doing well. We will continue with our series of using real time market price action to learn the application of technical analysis with the intention of taking more informed decisions in the market and also to hopefully be a profitable trader. So, continuing with the series, the chart for the day is Nifty Bank, and as usual, as has been the process all throughout, which is consistent and easy to replicate by everyone who is watching this video, is that we will start off with the monthly time frame before we take the final trading decision. And if we look at this monthly time frame, we see that with the exception of the 2020 COVID crisis, this index has repeatedly created newer highs. And it is very elementary textbook definition that if a security is creating newer highs, it is necessarily in an uptrend. In this channel already, in the last few days, we have analyzed all the sectors on the monthly time frame. The one thing that is unique in Nifty Bank as compared to, for example, Nifty Auto, Nifty Pharma, Nifty FMCG, Nifty IT, Nifty Media, etc., metals, of all of these sectors that we analyzed, the unique thing about Nifty Bank is that it is the only sector that has actually created a new life high. And when this security creates a new life high, there is now absolutely no ambiguity that this particular security is trending bullish. And the only question is now, what is the strength of the trend here? In other words, when a security creates a decisive all-time high, we don't really look for patterns anymore. What we look for now is pullbacks in order to create a long position. And why long position? Because we are trend traders and we trade in the direction of the trend. We are not we do not make forecasts like analysts on various mediums, social mediums. We do not call the high of the market, we do not call the low of the market. We only see the high in conjunction with the previous high, which if the new high is higher than the previous high, it is simple, it is an uptrend. And we look at the lows to form a similar opinion. So with that, we simply shift our time frame now to the weekly, and this is going to be the time frame in which we are going to act. We see that the market has currently closed at 54,115, which is pretty much the level at which it created an all-time high. So in case someone missed that breakout of all-time high, which the market did in April 25 earlier this year, well, you are getting the exact same price today as you were getting in April. So essentially from April till date, the market's net return would have been zero. But our bias is obviously coming from the monthly time frame, which is the long trend bias, and we can see the formation of this all-time high here, and the pivotal low is right here, which means this is a recent phenomenon. So what I will do here is I will choose up a fib indicator and simply connect the high and the low. And for the purpose of this video, I will use this chart as a method to teach you how to infer from the Fibonacci tool. So while we are working with the Fibonacci tool, all that we did was connect the previous low, the pivotal low, with the pivotal high. And what it did is it told us the exact distance that it has moved. For example, here it is saying that the pivotal low was 47,695. And the pivotal high, let us just assume it is 57,695. It's coming at 675. I'll just move this here. So let's just assume it is at 57,695. So good for us. It is exactly 10,000 points is the difference. So it becomes an easier example to study. In other words, the length of this entire swing was 10,000 points. Now, this swing resulted in a new all-time high. Therefore, the trend is an uptrend. The question that Fibonacci helps us answer is, what is the strength of this trend? And this is how we will use this tool. If the pullback is happening only till the 23 period, that is 23%, which means the full length was, let us say, for example, 10,000 points, then 23% of that 10,000 points, which means you are left with 7,700 points of gain. So which means the distance from the starting point till here is 10,000 minus 23, or 77% of this distance. If the pullback only happens till here, then we will assume that this security is not just trending bullish strong, it has too much of momentum going on. That's very, very strong. If the pullback happens at the 38% fib retracement, 38% would mean that of the 10,000 points that the market has, of the 10,000 points that the market gained, it has given away 38%, which means it is left with just the remaining 6,200 points of overall gain. We will consider that any pullback till the 38% fib means that the market is trending bullish strong. So if you and I create a bias that this is a bullish strong market, then the 38% fib zone becomes the zone to react. Coming further below, if the pullback happens all the way till the 61% mark, which means that the market moved up 10,000 points, but it corrected 6,100 points down, giving away 61% or 62% of the points that it has earned, leaving it back with the remaining 38%. In that case, we will continue to maintain the assessment that this is a bullish market, but we will not say that it is a bullish strong market, but rather say that this is a bullish weak market. And finally, if the pullback from this 10,000 happens all the way back to 78% or 100%, which means it gives away this entire gain and comes back, we would have known that it would form a double bottom. And officially, once it breaches the 78% to the 100% mark, we will say that this is a range. In other words, we will say that the market has given up on the trend and has reverted back to a range. The question is, do we make a prediction that will the market stop at 38% or will it stop at 50% or will it stop at 62%? And the answer to this question is depending on who gives the answer. My point being that it depends on the analyst. It is my view that you can make predictions, but because there is such a strong correlation between a losing trader and a trader who makes predictions, that I personally try to stay away from that. That is what I have done, or what I have attempted to do is I have attempted to create trading systems which I will deploy if the pullback happens at 38%. That is, I try to create a system which tries to answer the question, what will I do if the pullback is still 38%? What will I do if the pullback is still 62%? And what will I do if the pullback is all the way below 78% till the 100% mark? And it is the what will I do that I try to answer rather than making a claim that the market is going to stop here. In other words, as a trader, our job is actually not to make predictions at all. In fact, I will just digress momentarily from the technical aspect of the discussion to maybe a more philosophical aspect of it. I was asked that what are some traits of good traders in one of the interviews that I gave. And I just told the person that it is easier to answer what are the it is very difficult to answer what are the traits of good traders because there are so many different types of good traders. But I can definitely tell what are the traits of bad traders, and that's an easier answer to give. So the number one trait of a bad trader is that they make predictions or they speak in absolutes. They say market यहाँ पे रुकेगा ही, मार्केट का न्यू हाई क्रिएट हो गया है, 38% फिप पे आ गया है, इतना स्ट्रॉन्ग सपोर्ट है, यहाँ पे मार्केट रुकेगा ही. दैट इज द स्टेटमेंट दैट दे विल मेक. And the problem with that statement is that the minute you make that statement, see, what happens is that at the initial level of trading, you do not realize how closely this is linked with the conversation that you have in your head. And this is the reason why trading becomes extremely psychological or philosophical as an endeavor. The day you become certain about any event in the market, I'm telling you, you are going to play that in the form of going fully leveraged into that trade. So for example, if I believe कि बैंक निफ्टी यहाँ से बढ़ेगा ही बढ़ेगा, so then the question is, how do I trade that? अगर वो बढ़ेगा तो it is obvious I'm going to buy it. I'm in the direction of the longer time frame. It is at a strong support on the weekly time frame. Everything seems so perfect. But now the question is, how do I buy it? If I come up with 100% conviction on this trade, then I can literally buy 2000 lots of Bank Nifty futures and get into the market. But now the question is that the correct way to go about it? So, see, this is where the challenge comes. The day you become certain is the day your quantities become outlandish. And the day your quantities become outlandish, regardless of your assessment or regardless of what you have done before this, you are going to pay a disproportionate price in the market. And even if you do become successful, if you continue with this habit, the successes become very short lived. In other words, what we are looking for is not being able to predict whether the market stops at 38%, rather be planning what to do if the market stops at 38%. And because the very definition of planning implies that there is a probability that the market will not stop at 38% and it will go all the way to 62%. So it is possible that, let us say you are bullish on, you're bullish on some bank, ICICI Bank. Let's assume that you're bullish on ICICI Bank at 38%, and you come into that trade with a 5% stop loss. Now that trigger happens, and now this Bank Nifty corrects even further and goes all the way to 62%. What will be our assessment of the trend? The trend will still remain bullish, which means we would still believe that Bank Nifty and most likely ICICI Bank is bullish. So which means that at having booked the loss of a long position at 38%, we will re-enter the same long position at 62%. And what will we do if it continues to fall further? This time we will change our view from bullish week to a range, and we will have to determine as traders, do we even trade ranges, etc. So point being that our trading actions are going to be consistent with with the dialogue that we have in our head. And the day our dialogues become very specific, become very forecast oriented, is the day we are going to make a mistake on position sizing. And it is not going to be your assessment on technical analysis that is going to determine your fate as a trader. It is going to be the quantity that you actually pick up on that one or two trade which governs your fate. And a lot of work is required in order to create a mindset and a trading system which drags more quantity into successful trades, because it is so counterintuitive. You are continuously buying the security despite it creating new highs. So with that, the intention of the video is that when a market creates a breakout or a new high, we don't go around looking for patterns. Patterns only come when the market is in some kind of a range. It should be within some high for some period. And when it does create a breakout, we start deploying trend following tools like Fibonacci, moving averages, ADXs, etc. in order to estimate where we have to take action. And the direction of our action is only going to be in the direction of the dominant trend. And while we take action, we have to factor and believe that we are not doing anything wrong. We are trading a system, and we have a system for trading a 38% pullback on Fibonacci, and we'll deploy that system, which will do wonders provided the market takes the support at 38% Fibonacci. That system is designed to protect you in the event the market is not going to stop here. And so when your stop losses trigger, you have to take them as a feedback from the market, and generally that will only be happening if your principal hypothesis is not correct. You may recollect that in my previous video I told you that a 5 lakh rupee trader and a 5 crore rupee trader have different challenges. A 5 crore rupee trader needs the theme to work, because you must understand, I have mentioned clearly that if you have 5 lakh rupee and someday that capital increases from 5 to 10, 10 to 20, 20 to 40, and at 5 lakh rupee, let us assume you were trading 2 lots of Bank Nifty, then my recommendation was that at 10 lakh, do not make it 4 lots of Bank Nifty. Rather, at 10 lakh, add another index or another security. Then at 20 lakhs, add 2 more indexes and securities. Do not keep increasing the quantity. Now, assuming that I use the same philosophy, then at 5 crore rupees, I would pretty much be tracking all the 250 stock futures. But I would still be going the same 1 or 2 lots. Now let us assume that one of those stock futures has a catastrophic fall. It falls by 10 or 15%, which means I would lose 1 or 1.5 lakh rupee on that particular trade, which is, you will acknowledge, it is a few percentage, 0.2, 0.3, 0.4% of the overall account value. And similarly, if I have to gain 2 lakhs, 3 lakhs, 4 lakhs from the stock future, it is not even accounting 1% of the account value. So the only time the whole account can grow is if the theme works, if all the stocks that I have picked up on the 38% FIB support level, if that theme works, only then can the 5 crore rupee account grow. Whereas, let us assume you were a 5 lakh rupee trader and all you could do was trade Bank Nifty, and that is all you bought, and Bank Nifty took the 38% support. Your account is going to jump from 5 lakh to 15 lakh extremely quick in a single wave. And you are going to start making the assumption that you are a great trader, which is a reasonable assumption to make, because if you can capture a full swing, you deserve to pat yourself on the back, because every day you are in profit, you will feel like booking out. So that's a psychological win. But you must understand that at the highest level, or at a higher level than wherever we are right now, we need a broader theme to work, and our skill sets need to be aligned to group the market and its constituents into those themes. And therefore, I have been trying to exercise, I have been trying to have these sessions where I cover price action on markets. Of course, I have, because it is impossible to teach everything that we know through any single medium. It is just impossible. Different mediums bring out different points of view, and therefore my intention is that I want these videos to be seen in continuation with what I have already taught on Upsurge, because it is, you can see from the number of channels, you can see that if I say water boils at 100 degrees, there is no image of a water boiling at 100 degrees, that there is no investment that I'm doing in terms of production. I'm not hiring a team, I'm not hiring editors. This is all sort of a continuation of a lecture that I have taken there. And in that lecture, I have taught certain things, but I have obviously not spoken about so many other things. And those who would see how I have tried to put in multiple factors into different time frames to create a complicated system. And there are also sessions in which they will see how I have used very few factors in a single time frame to create a very simple system. These two broad ranges of creating a simple system and a complicated system are covered there. And then there is this in-between range where an opinion is formed on the market, which is what the intention is that I will be covering it here. There is obviously no substitute to hard work, and I understand that the general messaging is that trading is very easy, and it is actually, but you must acknowledge that even playing chess is very easy. You just have to pick up a knight and put it here, and then pick up a rook and put it there. It's very easy. But I can challenge everyone watching this video, become a grandmaster and show if it is really that easy, because the physical activity of doing it does not measure, or is in no way a barometer for the mental complexities involved here. And the mental complexity that trading actually creates is the challenge. The challenge has a way of multiplying when your capital and when your responsibilities become bigger. That is, your actions begin to start having repercussions across more accounts or more people, or simply more money. So it is very important for you to disconnect yourself from the results of a single trade, and it is very important for you to continuously assess how you are feeling. And if you are feeling scared, or if you're feeling euphoric, you are doing something very wrong in the market. And I can guarantee you that mistake is coming on the quantity of the trade that you have taken. Either you are, even if you're trading one lot and you're nervous, then it is because you're doing that on a very small account size. The trick is not to have a very large account. It is not to have a very small account. It is to have an optimal account size for the system that you're trading. And I have tried to share the math behind it, the technical aspects about it on various forums. So and this, of course, is the intention of this video on a holiday, on a festival night after all the celebrations, is basically just to share a point of view that there is more to trading than simply trying to pick stocks, bottoms, and futures. In fact, actually, that is, I don't think so. That's even connected with trading. That is connected with the content creation. And another message that I want to give is, a lot of people have asked me, like, about, let's say, for example, my content or my interview in, let's say, with Punch Trading Company, or with Grow, or with Dhan, or with Josh, or Digital Blogger, or whoever. I want to make it very clear that I go there as a guest. Okay, I speak my point of view. I don't own that content, which means that I don't decide what of it gets edited. I don't decide what shorts are going to be created, what reels are going to be created, how they are going to promote it, if they are going to promote it at all. I don't decide on the title, like whether the title should be 10,000 to 10,000 crore or 10,000 to 10 crore. I don't decide on any of that. I generally speak before getting onto a podcast. So people ask me, how do you get onto it? So essentially, I'll tell you that I post on LinkedIn. On LinkedIn, I'll write something that I feel. I've been doing that. I don't have a LinkedIn premium account or anything. I just do it because I feel like writing. And these companies, media companies, have what is known as a casting team. The casting team has two kind of roles. One of them is to identify an already existing influencer in the industry and bring them on the show. The reason is that influencer comes in with his followers, increasing the presence, or increasing the following for the media house that is inviting the influencer to have natural followers. And the other one is to bring in new people who bring in a fresh perspective for the media house to gain organic followers. The advantage for the media house to bring in new people is that the new people, like myself, who have no followers or no social media presence, they are in no position to ask for money or any kind of a compensation. The good thing for them, so in other words, it works out to be economical for them. But the bad thing is that bringing me on the show does not naturally bring guests. So they have to work hard for that in terms of performance marketing, which is overcome. So there is a balance that has to be, there is a balance that needs to be struck here. And you must see this from the point of view of the media house. For example, when I came on television because, there is a portal where set of SEBI research analyst names are written, and you will see there are a few thousand names in the country. And one of the panelists, who's an analyst, I think there was either an illness or a death in his or her family. And because of that, I was given maybe less than 15 minutes or half an hour's notice that I need to come at a 2 o'clock show on television. So my point being that this is the modus operandi of how I get into certain interviews. I can guarantee you that I don't pay money. I have never paid anyone any money to be brought anywhere. And generally I have benefited because a lot of independent media houses are looking to grow, and some of them are looking for this segment of people. And therefore, so I hope that the intention of speaking on this holiday was, in addition to Bank Nifty chart, just to share a perspective and to answer a few other questions as to how and a lot of people obviously tell me that this channel deserves more views and things like that. You must understand my intention. My intention is to first of all practice my own communication. Like, that's the first intention, because that's a skill set by itself. And the second one is, I see this as a follow-up conversation with a few 150 odd students. The channel has grown to around 1800, 2000. That's a good thing. I was not expecting that, but it is mostly directed to around those 150, 200 students who were there. And there is another 50, 100 odd whom I might have consulted or spoken to about for astrology. So therefore, that was the intention of this channel, and that explains how I hope that tries to rationalize what I have been doing. I'll not take more of your time. Thank you for your patience. I'll see you soon.